Hey everyone, welcome in to another daily editorial here on the KE Report. We are chatting with Matt Badiali, editor of the New Energy Letter, published under the Mangrove Investor website, which I will link to below. Now, as we usually do, we're chatting with Matt about critical minerals and this whole green energy transition. We're going to be focusing more on copper and how it fits into this critical minerals new narrative. And also, well, I guess the lack of upside moves in copper and the copper stocks is, I think we all have read a lot of these bullish articles throughout this year about copper and the stocks, and it just doesn't seem like it's really captured a wider audience. So, Matt, starting off with copper, one of the main drivers or one of the main bullish narratives that I've been reading kind of consistently throughout this year is this supply demand imbalance. I've read some articles that said we're going to run out of copper, above ground supply of copper by the end of the year. Now, some of these projections obviously are getting pushed back. They do seem a little bit extreme in nature. But again, they're not transitioning over into near-term price moves. Starting off with this whole supply deficit that is coming in the future. Matt, how do you view that? How are you balancing out this, again, supply-demand imbalance when it relates to underlying copper prices?
Yeah, I think the numbers make it imminent. It's not immediate, but it's imminent. And so it seems like the analysts keep going, yeah, there's copper available, but the China's demand is down, and so we're going to push it back. And then, there's always some short-term thing that's going on in the macroeconomic sphere that kind of pushes everything back. And so it makes it less urgent to buy the copper stocks and less urgent for the copper price to rise. But I do think that there's just no way that we can see and get what we want in the electric vehicle space and in just the electrification in general space without a significant increase in demand for copper. The fundamentals are pretty simple. You can substitute aluminum for copper in some circumstances, but you can't substitute aluminum for copper in motors. It just, there's, because of the way the metal properties work, the aluminum would just be too big and way too much when you're wrapping a motor. So you have to have copper for that. You have to have copper for the wiring. So yeah, the fundamentals are there for the demand to spike. And when we look at the landscape, we just don't see new supplies coming on. So it is inevitable. But you know what they say, the market can react irrationally far longer than you can stay solvent. And I think that's happened in some cases. I certainly, when I look at the juniors, the copper juniors, I see some opportunities, but I also see just too many. There are just too many copper juniors that have been around and they've been spinning their wheels on low grade for a really long time. They compete for capital for the projects that actually have some merit.
Man, I think that's an excellent point. I mean, I would say that's the same in every sector, though, that, when you look at gold and silver companies, there's too many of them, too, competing for capital. Same thing in almost every space. Definitely, though, in the copper space, there's some assets that have been sitting on the shelf for a long time, sometimes decades, and we're just not seeing the M&A or the companies acquiring these projects to move them forward, or many projects getting built. So when you look at the universe of junior copper stocks, what stands out to you? What do you look for that you think will separate some of these maybe earlier stage companies from the masses?
Yeah, I mean, I'm looking for scale, the ability for these things to be large. I'm looking for grade. I really just have no faith in these little tiny or even large low grade. If you're sub 0.3 or 0.4% copper equivalent, where you're getting a little credit from a little bit of gold, I just don't think there's an economic reason for that to get built. And so I try to stay away from those. So you need scale, you need grade, and then you need the right political regime. That's the one thing I think that keeps getting overlooked. You can have some really good projects, and they're just never going to get built because for whatever reason, the political system is against you, and you can sit on them and wait, but how long can you wait as an investor? How long can you have capital that just sits there and doesn't do anything? So those are the three things that I'm looking for in my juniors.
Well, some of those actually even tie into some of the mid tiers too. Some of these larger companies that have assets that are sitting out there all around the world. So to your point about political jurisdictions, well, you can find well explored copper assets all around the world. Why not just stick with those assets, Matt, that seem like they are ready to go into production, do show that they will make money, but unfortunately that capital to build them just hasn't been there.
I get concerned because let's go and let's use Pebble for an example. Northern Dynasty's old project. This was a project that in 2006, 7, 8, we were all sure was going to be the next giant copper mine. It was in Alaska. It was a great location. It had Anglo-American who was willing to put money into it. They spent $1 billion to acquire half of the project, and then it never got built. It hit all sorts of crazy headwinds. The social licensing was poorly handled, and that money went to money heaven. A lot of capital was burnt up in Pebble, and a lot of goodwill, I think, was burnt up there. And we could probably name several of these projects where you had the slam dunk next big project that just ate up invested capital, which then makes people very reluctant to put more capital at risk in this space. When a project like Pebble in Alaska can't get built, what is one in Kurdistan or Turkey or something like that? Then it's even more risky, and so I think that's one of the problems. One of the reasons why you're not seeing capital move into these mid tiers that just need a little boost to get over the hump to get built and get into production is that there are risks that are just too much for the people that would be investing in them, too much for the capital providers right now.
Yeah, it's a solid point, Matt, because there's a lot of big projects that have been found in South America that got stalled for jurisdiction reasons or political reasons or tax reasons or the social license to build these massive projects. There's often a lot of pushback against large copper projects from environmental groups where they don't want to see it in their backyard, the NIMBY process. So from an investor standpoint, and as somebody looking, to invest in these copper stocks that may be listening, how do you navigate getting into a trend that seems obvious longer to medium term, but short term, you may be years off? We saw that happen with lithium in the past where it looked very obvious back in 2016 and 2017. But I remember investing in companies where people thought that'll never happen. Well, it became more than obvious now, but you could have waited 5-6 years before you really saw the uplift in 2020, 2021 to that space. We saw something similar happen with palladium, where a lot of people thought it would get substituted for platinum, and that was true, but it took years. Is the same thing going to happen with copper, where people languish in these stocks for years before the copper thesis actually plays out?
I mean, it could. Do I think that's likely? No. The question is, when do we start seeing demand hit supply? And how long does this play out? I think you have 18 months would be my window to say if the copper price doesn't start to move higher within the next 18 months, then we need to rethink this. But my point of view here is that we're taking positions in great copper projects now, and then when the copper price moves, then we'll start to move down the food chain and look for the really good development projects, the really good exploration projects. But back to the point of projects that you think are slam dunks, kind of running into social licensing issues. What about First Quantum's Cobre Panama? I mean, that's crazy, isn't it? That these guys are that project seems to keep bumping up against issues in Panama. This is a massive mine.
So, Matt, I guess to this point, are there any stocks that you've noticed that are doing the right work, that are getting noticed by the market, that you think maybe out of the wider range of stocks, it's one that you could ride that trend? Because we have seen money more or less concentrate in a few stocks, no matter what sector you're looking at.
So what I've done for my readers is we bought Ivanhoe Mines back in March of 2023. They own kind of the world class copper projects that I think are kind of the best new projects. And Ivanhoe has a track record of operating, in these places that are maybe a little too risky for some groups, but they seem to be able to get it done. So that's one I like. We actually had to get out of some of our junior copper projects because of the projects we were talking about. I recommended Ivanhoe Electric. Same kind of reasoning. I like the way they can operate. And actually, Ivanhoe Electric has projects in the U.S., but they're also tuned into exploration, which I like. And then, I recommended Capstone Copper back in 2022, and that's had a pretty good run. I'm not sure that that's one that I would continue to buy now, but let's see how they've done. No, I mean they're still kind of at the top of their range, but they got really cheap. They were down, below 250 a share. They've run as high as 750 a share. They're sitting around $5, $5.25 right now, and that's one that it's a quality asset and a quality jurisdiction that I'm happy to sit on this one and wait out the trend in that. I jumped the gun on some Ecuadorian copper projects that I thought had excellent, geologic merit, but I didn't anticipate the Ecuadorian government kind of coming in and changing the rules. That's probably something I should have thought about. That was one of the reasons why I've added that to my list of things, criteria that I want to use before I get into one of these stocks.
Well, Matt, just maybe a wild card question for you. When we see the copper price move, and so far this year it has not been moving, it's steadily declined most of this year despite the encouraging fundamental backdrop. But when it does move, like we saw it move a couple of years ago in late 2020 and early 2021, it wasn't the juniors that moved as we normally see in the metals. It was the seniors and it was the producers that moved. So something like COPEX, COPX, was a way to get a diversified basket of producers. And that had an epic run. A lot of times those stocks were up 3x, 4x, 5x, some of the individual stocks up more than that. And we didn't see a lot of life in the juniors. So while people were belly aching about their junior stock not moving with copper hitting all the way up to $5, the producers really ran. Is it maybe making more sense for people to look for a change in the copper price and position in the producers first before trickling down into the junior space? Or do you still think that the discovery and the exploration upside is worth the candle?
No, I think right now you're right on. I think a basket of stocks like that COPEX gives you is really a great way to play it, because you kind of dilute your company risk, you dilute some of that jurisdictional risk, but you have the upside to the actual commodity price. I like that. I like that idea a lot. Bookmark that, Chad. Thanks. But and we saw that with the uranium, right? We saw that with when the uranium price ran, the producers like Cameco was the best performer in the space, right? And it's now starting to kind of move down into some of the juniors. But I think what the market is telling us, when the commodity price runs and only the producers run, the market is telling us that they don't believe in the long-term viability of the price hike. And in that case, the copper price, we got up to almost $5 a pound in 2022, and then it came all the way back down to $3.20 a pound. So, that was, the market was kind of anticipating that. I found that really interesting. I think that, we're in the long-term slow bull market, or we're rallying. We're still seeing, higher lows. We need to see the highs come back up. So I'm looking for copper price to break through 440-ish, to kind of tell us that the bull market is in place and heading higher. But that's kind of where I think we are. I think we're in the bull market.
Yeah, well, we just need some more deals being done too, but it's the same as a lot of other resource sectors, right? I think we do need to understand that resource sectors can be a bit slower moving, especially some of these more established ones with copper that there is a market out there, but it just hasn't taken off to the extent that I know a number of people thought that it would. And the stocks still have kind of broadly lagged, even with some what seem like good drill results. It just hasn't caught a wider audience. But there have been a couple stocks that have done okay, and we've even seen a gold major start to consolidate some copper plays into them. But hey, Matt, thank you for some insights on the copper space. We'll chat again in another couple of weeks, again, focused on critical minerals and any major news that comes out of any of those sectors. So, Matt, thank you very much for your time, and everyone, be sure to click that link below to visit the Mangrove Investor website where you can find and keep up to date with Matt. Thanks again for your time, Matt.
Thank you.